Well, obviously, the past couple of days since Pfizer's groundbreaking announcement and what we all hope is an inflection point in this pandemic, the street has seen quite tremendous volumes as a consequence of that. But all of us who've been in this industry long enough certainly know a couple of days do not make a quarter. But there was always going to be a degree of kind of election bounce back, certainly here in U.S. markets. We've seen that since the clarity that came over the weekend, and the Pfizer announcement has just accelerated that trend.
So it could be shape up to be another good quarter for trading overall?
Too early to tell, Daniel, but certainly, I think some of the predicted, developments, as I say, there was always going to be a degree of bounce back once we had some clarity around the election, and that's certainly coming to pass, yeah.
Okay. As you said, you're making the majority of the business in the US comes from trading. How sustainable, if we look at 2021, how sustainable do you think this current trading environment is, particularly given all the uncertainty that's still there around the COVID-19 pandemic and its economic impact?
So let me be clear. I talked about the majority of our business here in the U.S. is coming from the investment bank. Within that, we have, as I say, this balance between our financing businesses and our trading businesses. And those are really the core strengths of the investment banking platform. And so if I kind of flash forward to 2021, what do we think the dynamics across that portfolio are going to be? Are we going to see, the same elevated crisis-driven levels, particularly in U.S. rates that we saw at the back end of the first quarter, beginning of the second quarter, repeat themselves in 2021? Unlikely. Are we going to see the same level of debt issuance volumes that we saw in April, May, June, as our corporate issuers began to recognize the severity, saw a window, markets open, interest rates come down? We've seen just a massive explosion of corporate issuance throughout the course of this year. Is that going to repeat in 2021? Probably not to that level. But look, if we're, as I say, looking at this week's announcement around the vaccine as a possible inflection point, we're already seeing indicators across the U.S. economy in terms of jobs growth, in terms of consumer confidence, that give us, and combine with that now the increased likelihood of stimulus here in the U.S. economy coming post-inauguration. So early in February, we can debate, is that going to be $500 billion, $750 billion, or $1.5 trillion? But it is going to have impact, right? And corporates, as well as our institutional clients, are going to want to have the war chest to participate in that upswing as and when it comes to play early in 2021. So I think, is it going to be the unprecedented levels of volume that we saw because of the crisis in 2020? Absolutely not. Are we still going to have benevolent conditions from a trading perspective and from an issuance perspective? Absolutely, yes.